just can't help it myself. I'm in love with you, and I just can't help it myself. I'm in love.
Good morning, guys. Good morning. How's everybody doing? I hope everybody's doing well. Let me make sure I got everything going here. Make sure I see you guys on my screen. First order of business, make sure you copy this link, 12 Days of Trading. I'm actually going to put it into the chat as well. Let me do it in this one so I don't crash the computer, as I've been doing perpetually here. Oops, hang on a second. Let me make sure I get this right. It's 12. Yeah, there we go. Make sure you get to the trading tools. Today, I'm giving away my Flash Trader tool, which is really the most valuable, useful tool you're going to be able to use in MT4, MT5, specifically designed for just trade entry and trade management. I think you guys will love it. If it's not the best thing you've ever had, money back. You get exactly what you pay for. No, it's free. It's really, really awesome. Enjoy it. So I'm going to keep this thing on here for just 1 second. We are in gold here, level 3, trying to get it out at 12.9. Let's see if we can pop it. Looks like it's popping a little bit for me. I need to see the 12.9 move here. Hang on a second. Let me make sure that I got it all working here. Yeah, I'm trying to get it up there. We'll see if it plays out. You guys are seeing the trade with me. So much to talk about today. I really hope everybody comes into the room today. I know it's like the last day before the holiday weekend. Nobody's around, and it looks like literally nobody's around today because nobody's kind of joining us just yet. But I am hoping people will come join us, because probably the single most important, most interesting live I'm going to have with you guys, because I'm going to deconstruct everything I did yesterday. Those of you who were with me yesterday, we had a great morning, and then we had a horrible FOMC where I blew $2 $250,000 eval accounts, which is, that's why they're evals. That's why I love prop. And by the way, my friends at Apex, be sure you get those accounts, because there is nothing better than prop. If you blow the account, you just, I blew, I think, $50 instead of blowing full $6,000, $7,000, $8,000, $9,000 worth of margin, which is what those accounts had. So what I can't even say I feel bad. I can't even say I feel bad, because it was like such a little. It was like it had no impact for me financially. But I do feel actually really, really good, because it was a super interesting session. I took a huge amount of data away from it. And I'm going to go through all of this with you guys, and I think it's going to radically, radically help you in just your overall trading. I'm also going to show you just how much of an idiot I still am, and we're going to look at all my gold trades right now and deconstruct them, and show you what I'm doing, what I'm doing things right, what I'm doing things wrong, and how everything that we're doing here hopefully is going to help you in your trade. All right, I'm almost there. I'm almost there. Come on, baby. Just do me a 12.9. There we go. Come on, come on, come on. Oh, there we go. There we go. There we go. And we are in and we're done on this trade. This account, this is a $50,000 account I started yesterday that is now $52,000. I'm $1,000 away from funding. I'm back to trading 50s because, you know, what the fuck? Those are the best accounts. But there's so much I have to tell you. First of all, from trade entry point of view, structure point of view, and then also some tricks of the trade and how we can get these accounts funded. Okay, everybody's got the QR code off the 12 days of trading. I'm going to take that off so that doesn't bother everybody as a banner, right? Let me do this. Hang on. Where the fuck is this banner? God, me trying to direct the show is like your grandfather using a computer. It's just pathetic. Okay. Enzo says, reminding me of what not to do. I still have PTSD. Yeah, you know, I actually don't have PTSD of yesterday. It was I knew that I was totally losing control when I was trading it. But what was interesting is I went back, and this is what I'm going to show you. I'm going to show you how I could have traded yesterday and actually made money and not really, you know, done the exact same thing, but made money. And we're going to talk about that in a lot of detail. Anyways, you see my chart. Lots of trades have gotten resolved. As I said to you, 50,000 account up to 52,000 just in one day today, off of a much more disciplined approach of what I'm doing. And I'm just gonna, let me see, what time is it now? Is it, what time is it? 9:11. Oh, it's not even 9:15. Okay, we're gonna wait till official start time because clearly nobody's coming into the room early today, since it feels like everybody's already on. Who's on vacation already? Raise of hands. Who's like totally checked out of work and checked out of everything? Let's do a poll. Let's do a poll. Actually, you know what? Let's do a poll. You know what I'm curious about? Who's going to work? Will you be working the next 2 weeks? I'm curious. Like, how many people are going to be at a desk? Or actually, no, the better question is, will you be trading? Forget that. Will you be trading the next 2 weeks? Let's get a poll going. See what you guys think. What's going on over here? I'm looking at my feed. I want to make sure my feed is not laggy. Okay, looks good. So it looks like 2/3 of you are going to be trading. Interesting. Okay. All right. I'm just chilling out, waiting for everybody to get into the room because it's early and there's so much interesting stuff that I want to go with you, talk to you about. I'm just looking at what NAS is doing, what S&P is doing, all those things. One other thing I was going to tell you is huge amount of demand from everybody for alerts to the trend signals, both retrace and momentum trend signals, and alerts to the reversal signals. So it's on my to-do list. I'm going to try and see if I could code it today, have it ready maybe for tomorrow for our private class, but for sure, I'm pretty sure actually I'm going to have it ready for Monday for everybody. So I'll let you guys know for Monday. But very much over the next 2 weeks, I'm doing a huge amount of cleanup in terms of software structure and everything in BK. Monday is going to be my last day of live trading for the next 2 weeks. I'm going to come back on the 6th of January, 2 Mondays from then, to trade with you guys. But I'm going to clean up a lot of the stuff and make it really, really pretty and get it all going. Enzo has to attend the driver awareness course. That sounds like such bullshit, Enzo. Okay, have fun. Have fun in your driver awareness course. Okay. You want driver awareness? Drive in New York City, where you got to dodge pedestrians, bicyclists, and the oncoming traffic all at once. There is no greater video game to train you on than driving in New York City, where nobody follows any rules at all. All right, guys. Interesting. So I'm actually watching NAS here a little bit. NAS is giving us okay, let's do this in my other account, because it's nothing I want to do. So we're going to just take the NAS trade, make sure I got it. Let me get in here, because that's a legit trade. Let's get in there. Buy market. Okay, cool. All right, and then I'm going to, since the gold trade got resolved, we can watch the NAS trade right now. Let me switch the accounts here. You guys can watch this. Where's my NAS? There we go. I do have. Okay, and I'm going to manage this with you guys too. I'm not like old gung ho and trading trend trades, but I think this is okay. I'm going to talk a little bit about managing trend trades versus counter trend trades and all sorts of other stuff later today. But let me just do a defensive ad on my NAS, and then we can talk. Okay. $24 and a 20-mile. Oh my God, you. And so this is why you got to like just fucking get out of UK. The DEI hell that it is. 24 and 20. Jesus Christ! You understand that in New York City, like cops don't even blink if you have like a little child that's crossing against the red light on a big truck oncoming. I mean, God, what a bunch of pussies. Okay. All right. Anyways, long NAS for anybody who wants to do it. Nice classic trend move. This is a retrace trade that we took long here. What you're going to notice, first thing you're going to notice, might as well talk about this, is the NAS trade now is suddenly a 20-20, 80 ticks, 80 ticks, not 10 ticks, 10 ticks, right? So let's talk about in principle about what happened yesterday and like how we can use all of our trading, how our user can use our scalping methodology to really, really optimize for high volatility days, low volatility days, so on and so forth, in a very quantitative way. So one of the things that I really, really want to talk to you about is how we're going to eliminate a lot of bullshit subjective judgment and attach actual quantitative values to our entries so that, there isn't a lot of room for interpretation. You either go or no go. And, more importantly, you know what to do when you go, when you don't go. So first order of business is I'm going to define scalp. I'm going to define a scalp trade as 10 basis points of the underlying. Okay, approximately 10 basis points of the underlying. Okay, that's 1/10 of 1%. Give me a yes if you guys understand what I'm talking about. So a scalp trade is a short-term, small-scale trade, right? That's what a scalp trade is. But we're going to define it in a quantitative measure. That's going to give us a much cleaner perception of what we should be doing as far as stops and targets. Everybody following me besides Enzo, who already knows, like, I want people who don't understand this process to give me a yes. I want everybody who's listening to me right now to come in and tell me, yes, Boris, I understand what 10 basis points is. I understand quantitative measures, blah, blah, blah. Because once you get into numbers, trading becomes a lot more controllable and therefore a lot more manageable and therefore hopefully a lot more profitable. So why 10 basis points? Because that is a decent number. And since it's a percentage number, it is always adjustable to the underlying volatility. So 10 basis points of Bitcoin is about $100, right? I think. Shit, am I right? God help me if I'm. No, shit, 100,000. Fuck. All right, Bitcoin is a terrible example. No, yeah, that's right. No, 10 basis points of Bitcoin is $100, which is actually what I do. I do this naturally, actually, with you guys in London trade. But in New York, we have 3 instruments that we're trading. We're trading NASDAQ, which is a $20,000 product, right? And what is 10 basis points of $20,000? It's 20 points, right? 1/100th to 1%, or in this case, is 10 times 1/100th. It's $20. Everybody follow me? Here's where it gets interesting. Remember, we were trading the S&P yesterday, and I was like, "Oh, let's buy it every," and I was buying it every $2 down, and it was going so fast against me that I was like, "Fuck, I can't even, I can't place the trades fast enough. I'm getting stopped out so fast." Well, think about what I was doing. What's the value of the S&P? What's the value of the S&P right now? Type it into the chat for me. Explain to me. Guys, what's the nose to? What does the no mean? No, you don't understand what a basis point is? Do you understand what a fraction is? Do you understand what a percentage is? Percent is 1/100th, and basis point is 1/100th of that, and 10 basis points is 10 over 100. Is that clear? Just basic mathematics. It's financial math. Like you need to understand this if you want to at all trade, because especially in Forex, what do you think a pip is? A pip is a basis point. It's a percentage in point. Okay? Yeah. So the NASDAQ is a $6,000 product, right? What's 10 basis points of $6,000? What's 10 basis points of $6,000? Somebody write it in there for me. Give me an answer. $10 basis points of $6,000 is not 2. It's 6, right? It's 6. If I'm trading for 2 fucking points in the S&P, I am completely wrong on my volatility envelope against the instrument. I'm guaranteed, like the instrument just moves, if the instrument moves, it's going to blow through my levels like there's no tomorrow because it's just too tight, right? It's just 6. So, okay. So you say S&P is not as volatile as NASDAQ. Maybe it doesn't require a full 10 basis points volatility wrapper. Okay, let's do a compromise. In which case, I'm going to do the compromise with you that I'm now trading S&P 4. I'm trading it 4 up, 4 down, which is 7.5 basis points, which is good enough. At least that's reasonable. Reasonable versus fucking 2 points, which is just 30, which is 3 basis points, which is too tight. 3 basis points is nothing. At least 7.5. You're somewhere in a zone where you're not going to get stopped out continuously. In a move, right? So the first order of business is to get the stops and targets correct. Now, the last instrument that we have is gold, right? Where's gold now? Gold was a $2,000 product. Now it's much closer to being a $3,000 product. And the proper ratio in gold, as you see me trading gold, which is also much more volatile. There's two things you want to think about when you're looking at a product. One, its underlying price, notional price, which sets the baseline idea, and then its volatility signature, right? So is gold volatile? Fuck yes, it goes up 2% a day on any given day, much more volatile than the S&P. So if the S&P can be maybe 7.5 basis points on a stop target basis, gold really needs to be actually maybe 12, which is what it is. So now what I did is I set gold at $3 up, $3 down, right? So what I've done is I've set up wider targets, wider stops to synchronize the volatility of the instrument, and also the internal volatility signature of the instrument itself. So to synchronize, the notional value of the instrument, and then the volatility of the underlying instrument, right? We know Nasdaq is very volatile, so 10 basis points is kind of the minimum that you want to give yourself in order to be able to kind of absorb, the various punches that they're going to be throwing at you by the market. We know that gold is very volatile, so you want to give yourself maybe 12.5 basis points of stretch. And we know that the S&P is much more muted, so maybe we can get away with 4 instead of the full 10 basis points. We can get away with 7.5 basis points, right? Everybody follow me on all of this? Yeah, you can look at the ATR. You can look at at all stuff. I mean, I like using this. I like using basis points because it's the least derivative. It's sort of like it's the first purest quantitative value, because anytime you're using RSI, ATR, anything else, you are dividing over a division factor. You are trading a second order derivative in many ways. In other words, you're diluting the pure value of price, which is I want to be as close to price as possible. I want to shadow price, right? I don't want to be having a abstract model of price, which is what ATR is, or abstract model of volatility, which is ATR is, or relative model on a base of 100 for RSI. I just want to be totally in sync with what is the actual price value of the underlying and what is the general volatility signature of the whole thing, right? All right, so we're close enough. I'm gonna take this trade because we're before. Oh shit! I'm sorry. I'm in the wrong thing. Sorry. Okay, it got filled anyways. Fine, beautiful. So this was a 20 point trade. We got filled. Why is this not? Oh, because my defensive trade. I'm getting rid of my defensive trade. Okay, I got rid of my defensive trade. That was my second order business. So this was a trend trade. We traded. So a couple of things you notice, by the way, about this particular trade that I was doing, right? First of all, it's not fucking insane, right? It is not taking less than 3 seconds to resolve, and I'm not rushing like a chicken without a head trying to manage my positions. I spent the last 5 minutes just postulating and expounding on notions of volatility while the trade was there, and I had my defensive position on the second level, and I didn't have to do anything. And even when I fucked up, it didn't matter. It didn't matter because the whole thing resolved for me perfectly. So the first order business is you kind of want. Remember, we are not high frequency machines. We're not computers. We're never going to be ones. We need to be able to compete on a field where we have generally a fair chance, and that's a human plane. And the human plane requires like a 5 minute. Let's assume that I need about 5 minutes in between trade sequences to get all my shit together. You need less than that. You probably need a minute, but you certainly cannot do this in like 10 seconds. You're gonna screw it up royally. You're gonna hit the wrong button. You're not gonna be able to set the stops and targets. So you have that breathing space, right? We have all that breathing space by expanding our volatility, because the markets are going to take longer to fill the stops and fill the targets. So that's like a lot of key thing. It not only is it the proper risk model, but it's the proper risk model for the human trader, right? So that's number one. It's number one, right? So that's kind of like a foundational idea. What's the notional? What's the definition of a scalp? What's the underlying volatility of the instrument? And do I trade a little bit above or a little bit below the 10 basis points, definition of a scalp, right? Everybody clear on that? Give me some yeses. Give me some thumbs up in chat, so that I know you guys are clean and clear. I want to make sure that you understand the structure. I'll give you a few minutes. Okay, good. Okay. Now, technique. Let's talk about technique, right? Oops. What time is it? We're market open. Oh, all right. Let's watch the market open and have fun with the market open first, and then we'll talk about technique and everything else that's going on. So NAS kind of dropping. So first of all, just sort of review where we are post FOMC. We're having a typical post FOMC bounce, although gold is the only one that's. By the way, let me go to gold. Fuck, gold may be a trade here. Let me just look. Okay, it's so much easier for me to actually teach by showing. So let me show. I'm gonna go into my gold account, into my 50,000 account, right? And gold has a buy reversal move here. Ah, shit. Okay, it's too. Hang on a second. I missed the trade. Sorry, guys. It's I missed the entry, and I'm not about to chase it. If I get one more, label down, I'll be happy to buy gold. Gold had a lot of really easy trades here, and I'm actually going to let's talk about. What's really good. Let me change. Sorry, let me change it to my gold account. You guys are seeing the wrong account. Okay, here's the gold account, 52,000. Okay, so let me show you how to properly trade reversals in a huge, volatile, big market move, where the rules are really crystal clear and not where you're doing a lot of cowboy trading. Okay. And I'm going to show you by showing you cowboy trading, by showing you stupidity trading, and then I'll show you proper trading. Okay. So the first order of business, if you're going to try to buy bottoms, sell tops, is you don't do anything. You don't do one effing thing until and unless you actually get a reversal label. So this is not a buy trade. This is not a buy trade. This is not a buy trade. These are all idiotic trades, right? These are all stupid fucking trades that should never be done. Your job is to do absolutely nothing until the buy reversal comes in. That's just your initial entry into the position. Because the basic methodology is until and unless the price breaks the 8-period SMA, it is in a one-way down market. And if you saw this yesterday, we can look at the charts yesterday. Yesterday was a market where it was like 100-point downtrend without ever breaking the moving average. If it doesn't break the moving average, there's zero effing reasons that you want to get involved. It's only when you start to see prices change their direction, even for a very short time, that it becomes a possibility of buying the bottom, selling the top. Oops, hang on a second. We got another buy reversal trade here. I'm watching this trade. Let me see. So what I'm interested in right now, let's get bigger here, is what I'm interested in right now. Actually, I'm not getting it. So what I'm interested in is this candle, unfortunately, made a lower low. When I have a buy reversal, what I want to do is the proper technique of entering, and this may be this is actually okay. Maybe we'll we'll just go. Hang on a second. Join bid. Can I get it in there? Let's see if I can get in there. All right, I'm in there. I'm in a little bit high. I'm chasing it, but there is a legitimate reason for why I'm entering this trade that I feel okay about. And this is only my first trade, so I'm perfectly okay that if it comes back down, I'm not at a horrible entry. So when first I get a buy reversal signal, the next order of business that I want is the low of the candle must be higher than either the buy reversal, the first candle that has the higher low after the buy reversal candle. So just to give you an idea, here's the buy reversal. The actual entry would be over here. Now, this is an entry where you're coming in over here. It's probably going to retrace against you a lot. But overall, I actually don't even think this one stops you out. If you buy this over here, what is this? What's the close on this? 11.2 is the 11.9. So 12 is the close. The low would be 9. I survive the 9, and then it goes up again. It goes to 13, 14 over here, higher. So, you're in this trade without ever, you're still not stopped out. It's not a perfect entry because this candle is so massively huge. And the really, really great entry would be when you, like, for example, this would be a good entry. This buy candle, let me get this bigger, really, really big in the screens. This is a buy reversal candle. The next candle has a lower low or an equal lower low. You're coming in over here at 10.07, and it goes all the way to 13, and you have basically a 3-point trade. So the technique is very quantitative. You have the signal, and then you're looking for one very non-subjective view, which is that the low of the candle must be higher than the buy reversal candle. The reason why you have that rule is obviously because you're just waiting. Let me show you why. Like over here, this is a buy reversal candle, right? If you bind here, you're going to be suffering all of this decline like you did yesterday. However, if you buy over here, this is the first candle right over here that does not have a lower low. You're buying over here at your first entry. That's an excellent entry. Even if you get stopped out, it only takes 2 entries to resolve the whole thing, right? It only takes 2 entries to resolve the whole thing. You can see that I was sort of struggling, still trying to correct myself. But the technique becomes very, very clean. First of all, do not do a damn thing until you get a signal. And then do not do a damn thing until you get a higher low or a lower high, if you're doing the reversal stuff, as your first entry. Just your first entry. So now you're giving yourself the best possible chance to set you up for success, right? It doesn't mean success is coming. Success could still be a long battle, and the market could really, really fight you. But at least you've given yourself a much better entry chance than just say, "Oh, I'm going to dive in like a cowboy and start fighting blindly." You're waiting until the odds are much more in your favor to begin the battle. And that 2-step process eliminates 90% of, first of all, it would have eliminated all the losses yesterday. Had I done that 2-step process at every single juncture in the move yesterday, I would have been able to resolve my structures. Sorry, I'm not defensive on this. I got to get defensive on this. I'm talking and I'm not getting defensive. So now my second defensive on this is at 09. 0909. And oops, what happened? Oh, okay. My monitor just went off. So is that clear as a kind of a structural technical as a technique? It basically is as a trading technique, which is very similar to a cooking technique, right? You just want to make sure the ingredients are fresh, the knives are sharp. Same shit, right? You're not going to be cooking something with a plastic knife. You're not going to be using. And here, by the way, I'm going to just get out of this trade. Nice, and I'm at 52,000. I didn't take the full, $3. I took like $2.50. No problem. But it worked. Notice what was interesting about this. This was level 1 trade. Level 1 trade. Okay. So level 1 trade, because I wasn't fucking around. And I'm also, by the way, trading gold, which is at this point, probably the best volatility instrument for us to trade. So you guys are super quiet. Give me some feedback. I want to hear some thoughts on all of this. This basically, the first order of business is notional value of the underlying. Setting the general, scalp parameters at 10 basis points up, 10 basis points down. Then adjusting those parameters for the internal volatility of the underlying. Then, if you're trading reversal signals, making sure that the actual reversal structure occurs on the chart, and you're not just, buying or selling a level that you think is overbought or oversold. Let the chart tell you the first possible idea of overbought or oversold condition. Then making sure that you're entering on a first sign of actual bottoming or the first sign of actual topping. And that first sign is quantitatively defined as a higher low or a lower high quantitatively on the chart. Okay, so that's 1, 2, 3. And then finally, we come to inventory management, right? And what is inventory management? So we're going 1x, 2x, 3x, 4x, right? 4 times the size. If we're doing that, if we're going to go 4 times the size, right? The way the math works is it's you lose 1, you lose 2, you lose 7, you lose 15, and the way you kind of want to the way the math works is whatever is the last value of your loss, the next value will be double that plus 1. So the next level at level 5 will be 31x, right? So why is that important? Well, let's imagine I'm trading a $50,000 account. A $50,000 account has a $2,500 drawdown. And let's, for argument's sake, say I'm trading like with NASDAQ, the minimum amount I could trade with NASDAQ, which is 20 points, 1 micro contract, that's a $40 trade, right? So if I'm doing a $40 trade and I take that trade to 4 levels, I'm down $600. That's very, very reasonable against a $2,500 drawdown. Even if I wanted to take it to 5 levels, which I don't recommend, but you could absolutely. It's possible because I'm basically my net loss would be what, 31 times 40, which is $1,300. Still, half my margin stays alive, right? By the way, notice see these buy reversals? They're all making lower lows. You see me? I'm not moving. I'm not moving on this fucking trade until it shows me a higher low, right? See that? This candle is not a buy. This candle is not a buy. This candle is not a buy. This makes it really, really easy not to buy, right? I have a quantitative reason for why I'm not buying. We're going to look. We're going to see if we can establish a new position. So if you're careful in your entries, then you should be able to resolve all of these scalps within 4 attempts. Maybe, if it has to be within 5 attempts. And because you're not going to initiate your initial trade until you actually have some quantitative evidence that there is a bottoming going on. But let's assume you do all these things right, and then you still get blown out. Now, this is where it gets really, really a lot of fun. For those of you who want to trade prop, let me just put up the Apex numbers right now, because this is where Apex really comes in. Because you can really only do this with Apex, because Apex discounts all of their accounts so much. They're so cheap, right? You can buy like 5 accounts for the price of 1 anywhere else. Here's what you can do that's really, really mind-blowing. This is how I took the 50,000 account to 52,000 in one day. So suppose you're doing all this stuff right, and you're still getting blown out. You're now level 1, level 2, level 3, level 4, maybe even level 5, right? When you are at that level and you've done everything correctly, you are super close to a major turn, to like even a 10-point turn, right? So if you have the balls and you have the ability and you have a couple accounts, you can then just say, fuck it. This account, I'm like minus 1,300, but now I can go to my other fresh account and go 5 large, 10 large. Let's just say I'm going to do one trade, 10 large. If this is the bottom, I will survive the $2, $2.50 worth of risk, and it's going to pop up. And if it pops up like $3 or $4 on a 10 large, you literally fund your account in one trade, right? If you want to do that, it's just super fun to do that. Right now, by the way, I'm watching this this gold trade. This is the first candle that so far has not created a lower low. So we're going to watch this 32 seconds left, and we're going to see if we can buy this position. See if I can get in there. Okay, I'm in at 9:03. Oh, and nope, it still holds. It's still holding the lows. And this is what happened. Oh, wait. Exit. Oh man, I got super lucky. I remember I said I had the large contract on there. I totally forgot that I did not get rid of the large contract from way before. It was a defensive contract on the large side. So I just actually closed my large contract for a small win. But in the meantime, the small contract is here. I didn't quite make the perfect trade, but it's close enough. It's close enough for government work where you had 3 or 4 consecutive lower lows. This kind of looks like it bottomed out. This entry was not horrendous. And again, the quantitative part of it there is just to guide you in the right direction, and help you to avoid the most glaring mistakes. You're still going to make mistakes. You're still going to make timing mistakes. Now I'm going to get defensive on 06s here as my second level. And we'll see if we can resolve this trade as it goes up. But now I lost my train of thought. Oh, about the idea of like, okay, I did everything right, and I get blown out like to level 5 on one account. Then I can just plow, 10 large on the minis for the third account and just flip that account into a funded account right away. Now, once you're funded, you can't do this shit. You have to trade small and you have to trade, manageable. But the point is, if you want to, it's the great thing about Apex is because they have so many, they're so cheap. You can get like 5 or 10 accounts in your inventory. You can essentially fund 1 or 2 accounts like this every week. You keep them in reserve, and then you trade them obviously very, very conservatively that way. And let's say in real, when you're doing funded accounts, maybe you're not going to go 10 large, but you can go 2 large, make $500 on a funded in just one trade. That obviously gets you much closer towards the funding level that way. So you could sort of use the conditional probability of your own entries with the conditional probability of new accounts as kind of a super interesting way of managing these turn trades. Okay. Is that clear to everybody? Is it cool? You guys understanding my trick? So as you can see over here, the proper entry would have been over here. I'm $1, maybe even $1.50 below optimal entry. I should have been over here. Again, I rushed my trade, so I'm not an optimal level 1 entry, but it's just level 1, as opposed to me being level 1 over here, and that's a $5 move against me. That's already 2 levels that are unnecessarily taken. I shouldn't have taken. I wouldn't have had to take. So not a perfect punch, but but much better than just coming in blind, right? Against the move. You see how the technique it really helps you minimize unforced errors. That's the whole point. Is just minimizing unforced errors. Just trying not to hit the net. I'm just trying not to hit the net. Trying to get the ball over every fucking time I swing. Christoph says makes a huge difference. You mean the technique? my little trading technique? Is that what you're talking about, Christoph? Is that yes? All right, I see a lot of people came in late, guys. I really, really, really recommend you watch this from the beginning. I go through volatility signatures, notional basis, proper structures, and then finally, the absolute fine points of scalping technique in this video. So this is really, really good stuff to watch, especially over the vacation. Slowly. You can always, email me if you have any questions. You can always ask questions in chat if you want to. And if you guys want to join us, here's the link to join us. Here's the link to my coaching. But most importantly, I think the proper way of trading prop is with about 5 or 6 accounts at the ready, because here's the problem. If you don't have the accounts at the ready, if you remember, these opportunities are a matter of minutes, and if you don't have an account already paid for and ready where you can switch in your trade evade, you can just switch from one account to the next. You're not gonna be able to take advantage of those great turn opportunities, massive turn opportunities. You don't have to go large size. You can just go like 1 or 2 like you can turn my scalp idea into your swing idea, which is what a lot of people really love to do, right? You can take that trade into a 100 tick, $10 trade in gold, as it hits like 4 or 5 levels on the scalp out. Like just for example, let's hope it's not going to happen. Hang on just 1 second. Sorry, guys. But one possibility is this is level 1 for us, but it's clear the market wants to test the 2600 on gold, right? It just it's dying to test the lows on gold. So maybe it's going to flush out, and maybe it's going to flush me out through the 2600 without letting me recover or reorient my trade. Okay, fine. I may be at level 3, level 4. I'm still very, very small size, so none of this is the worst that happens to me is a $600 loss on a $52,000 account. I'm not going to cry about it. But having a second account at the ready, I can then just simply go maybe 2 minis, but this time I'm going to do like a $10 stop, $10 target, and boom, now you're a $2,000 trade. Now you're a $2,000 trade. Now that one trade becomes, instead of a $40 trade, becomes a $2,000 trade, and you're super close to getting funded. And you just need one more swing trade like that, and you're funded. Or you can just scalp on that account continuously. So you see how that having multiple accounts, having the flexibility to trade this properly, all of that really, really enhances your ability to get all these accounts funded. And obviously, the 50s are the easiest. Now, I open up a 150 just to just to be my Moby Dick, but I will say that and the fault is all mine. Yesterday, both of those accounts would have been down only about $2,000 maximum, and I could have easily kept trading them, and in 30, 40 days could have funded them, slow grinding fashion. I burnt them, but trading back to the 50s, which is like it's like me fish coming back to water. It's just much easier. The risk reward ratios are so much more favorable in your direction. Then I don't know why anybody would do anything else. Just because you want the big funded money, but the risk rewards against you are so bad that you don't necessarily want to do this. I'm going to get out at this at 26 ticks. Resolve. This is a net profitable trade for me on just the second level, and I was looking for $3. I got $2.6. That's more than enough to totally P&L me. Where am I at my P&L? Yeah, I'm almost at 52,100, right? So I'm like $900 away from getting funded, which if I do everything okay, I should be able to get this done next week. And that's that was an easy kind of a squeezy account. Do 4 or 5 of those, then you're in really great shape to trade the fully funded accounts. I just think that this is a super methodical, quantitative way of doing all of this, which I hope you guys really like. So the other thing I've been doing, if you notice, is I've just been trading gold primarily for two reasons. One, the trades are there. Two, the volatility signature of the instrument, given the Fed day, is very conducive to us. The $3 spreads really don't put me, I haven't, with the exception of just me being stupid, I really haven't been stretched more than two levels on my inventory management trades by being carefully entering. The Nasdaq and the S&Ps have also been really good, but they haven't had a lot of direction. And the other thing that I've been doing, if you notice, is I've really been avoiding trend trades because here's the difficult part. Now, the trend trades are fine, but the difficult part is how do we make the problem with trend trades in this very little volatile environment is if I'm buying it near the basis, I think it's fine. But if I'm buying it here and it's starting to come back down, and I'm only giving myself like 4 levels to resolve myself, I'm just afraid that you could, if you buy them high, you're just going to get stopped out on a reversal move. And because the moves are so volatile both ways, you're not going to get the bounces back that you will. With a counter trend trade, it's going to break. The very nature of the business is that there'll be profit taking dips and short covering rallies. With trends, you could just flip one way suddenly and flip the other way very suddenly, and then you're blown out on both sides, and then it's very, very hard to manage it at this point. So it's not it's not that trend is not great. It's just that I think in this high volatility environment, it's much more treacherous. And if I'm trading relatively small conditions, then I want to, although what I've done here is I've really tightened up my trend conditions, and I said, oh, no, I guess it's still 20. And some of these things, I actually tightened them up to like 15 basis points. So if it's less, it's got to be 15 basis points or less. But I think 20 basis points is okay still. As long as you're picking up these trend signals, you're probably okay. But this one, like here's a good example. You picked up 91, right? If you picked up 91, if you're trading this, it's a $4 stop. So now you're at 87, right? So you sell the 87s, then you buy 87s, another $4 stop. You buy 83s, right? 83s. So that's 1, 2, and then you buy 79s, and you got to resolve those back up. I guess you could have resolved it over here. I guess you could have resolved it in 3s, but it's still, you're pretty treacherous territory. You're dipping negative now. You're hoping that there's going to be some support. Generally, my whole view is if you're going to buy the trend, you want to buy it as close to the 200 period SMA as possible. The profit targets, I'm going to put them in the thing. And again, they're not profit targets. You have to create your own. Like the profit targets are derivative of a formula. The formula is 10 basis points as your whatever 10 basis points of the underlying, right? 10 bips of underlying, which is equal to just the calculation is 20 in sorry, 6 in ES, and 3 in gold, right? That's 20 basis points of underlying, 10 basis points of underlying. And then you can adjust those up and down. So in my S&P, I brought it down to 4. In gold, I brought it up to 3. And it's actually 20 in NAS, not 10. But the bottom line is, you just need to be doing this. So now we know. Now we're negative S&P. We can go to my S&P account. Let's go to my S&P account. The other thing is I segregated accounts by instrument, which gives me a lot more leeway. Shoot, am I missing this? Okay, let's go to S&P MES. I'm in at 77.25. Let's see if we can run this account. 30 account. Okay, here I am. So we're close to the moving average. This shit. See this? See this bullshit? Oh, was there news on? Was there news right now? Yeah, there's news right now, right? 10 o'clock. Sorry, guys. I just, that was a small amount of money, Bert, and it's fine. I'm gonna just let it be. I'm not going to. I'm not gonna fight this. If this goes negative, what was the news? I'm sorry, I wasn't even paying attention. What the fuck was the news? Existing home sales were a little bit hotter. Who gives a shit? Seriously? Okay, we're still, we're gonna sell this at 2. Okay, 80.75, and we're gonna get defensive on this at 4. So if this, actually, you know what I'm gonna do? Hang on a second. It's just moving so fast. Fuck. Okay, first I'm gonna get defensive, and then I'm gonna try to resolve it. So I got defensive, meaning that the next level is gonna be up here. Let's see if this thing dips on me into a resolution. I can't move my fucking mouse. God damn it. Come on, get down there. Get down there. Get down there, you piece of shit. Thank you. All right. I just wanted to resolve this trade into a modestly net positive position and then just get out. But, that's basically the approach. And the thing you notice that is I'm basically using a separate account for a separate instrument. This way, first of all, I don't have any margin issues because if I have to get large in one, I don't want to be getting large in two. But two, it also kind of segregates you by success. By the way, look at this move. Jesus, I was right. It was just super fast, right? This is the thing with trend trades. You kind of really have to focus on them when you're trading them because they can be so fast in this market, right? Whereas the counter trend trades take a little time to move back against the counter trend. Ironically enough, in a super strong trend, I find trading counter trend easier and more manageable than trading trend because trend is just so, like a wild buck. It's like a wild horse. It just keeps, you look at this, you short here, it stops out. If you weren't ready, you got fucked. Then it drops like 10 points against you the other way, right? And that's just the nature of the beast of the trend these days. So Hippo is asking a great question, and I know a lot of people do this, and so I don't have any issue with this, but I have my own opinion. So I'm just gonna render my own opinion. Copy trading is great because it can amplify good trades, but it's also the devil because it will amplify all your bad trades. In other words, imagine you have a day like yesterday. I see this all the time, like Matt and who's the fucking guy? Oh, Jesus. The guy with the sunglasses, Patrick Whelan. Like, they all love trading trade copy. And then like at least once a month, you see them on their feed with their tail behind their legs going, I just blew up all my accounts. I just blew up all my fucking accounts. I got to start all over again. Like, you watch it. It happens all the time. And the reason why that happens to them is because, yes, they're propagating profits when it's working. But one bad day, all their accounts get blown. And I'm also just, my personality is not a personality that likes to multitask. I'm a very serial person. I like to do one thing at one time in one division. So I love having multiple accounts. I just don't want to do the same thing in every one of those accounts. I want to do a different thing in one, a different thing in another. And remember, the cool thing is, the way I'm thinking about this is, it's kind of like, copy trading on steroids. I'm in a position, right? Let's say, okay, whatever. I'm counter trend trading, and it's like I'm at level 5. The fucking thing, but I'm doing everything correctly. This is not bullshit counter trend. I'm just doing everything correctly, but the trend is just monstrous. Like, I'll give you an example of what happened yesterday in gold and how I turned a a very problematic scalp trade into a massively valuable swing trade that made a ton of money for me. So if we go into gold yesterday, let me show you. This is the best way to kind of understand it. Okay, so we're going to go into gold, right? This is it. All right. No, sorry, it's not it. It's not even it. Wow, so many moves in gold. All right, it's coming up. It's coming up. Yeah, okay. So this is it. So yesterday, gold, right? Check this out. Gold just goes on a fucking tear after FOMC in Asia. From 8 o'clock at night, gives me the first signal over here, right? First signal at 19, right? Now watch what happens. It goes 19. Like if I'm going threes, it's not so bad. But at that time, I was still going twos, and that was really, really painful. So 19, then it goes, 22, then it goes 25, then it goes 28, and it almost goes 30. You see, I have that red line over here to show you 30, right? To show you 30. So even if in your best kind of methodology, right, you were still getting killed. You were like, you were like pressed up to level 4, maybe even level 5. So imagine you're pressed to level 4. Now you're like, fuck this. This is gonna break. I'm gonna take a punt at this because now, as I told you, I've been reading a lot of books about statistics, and everything you've been taught about statistics is completely wrong. Because the whole underlying idea of statistics is that everything is independent. Like the very fact that the price is 17 and the price is 30 doesn't mean anything. Like it's, there's just as high a probability for this to go 50 points higher from 30 as there is to go 50 points higher from 17 as there is to go from 50 points 09. That's the underlying idea of basic statistics, which is absolute and total bullshit in real life, because literally everything in life that matters is conditional. It's conditional on what came before it, right? It's just that, I don't want to get into like the long philosophical problems with how statistics all got screwed up, but this is where everybody goes wrong. This is why, by the way, every back test that everybody puts through all these statistical models and goes, look how great it is, always fails, right? So the point being is, if you are at this point, you're like, I think this is going to turn. And I actually went 10 large. I just said, fuck it. I'm going to go 10 large on a second account, which is kind of like a version of copy trading, right? But at around 29.5. And, if I had the balls, I would have got it funded on the first thing. But I was like, okay, 2,000 in, 2 points in, I'll take my P&L. It was like almost a $2,000, win on a 10 large. But you also don't have to do that. You could have just simply done, like, let's say 2 contracts, giving yourself 10 points. You could have said, I'm at 29.30. We just had a massive fucking move after the FOMC. I'm going to give myself 10 up, 10 down, and it eventually drifts down, as you can see, from the 30s all the way to the to the 18s to the 20s. So that's a $2,000 move, with much more loose stop parameters, and same kind of idea. You're essentially, you're almost funded on the account off of like 1 or 2 contracts. So that's what that's what I prefer to do, instead of doing copy trading, because I see the pitfalls of copy trading in terms of the movements, right? You guys follow me on all of this? Is this on? Are we on replay mode? No. Can I get to? Why isn't this taking me all the way to the end of the? I just want to get to the end of my chart. Okay. So does that answer your questions, guys? Hippo is asking, isn't copy trading automated? You're confusing 2 different things. What they're talking about in the futures prop space, copy trading means you have a master account and you just have 10 other accounts and they're all doing the same thing. Copy trading, like, if you're money managing, then you're just following somebody else's signals and they're copying into your account. That's not what this is about. In prop space, it's basically amplifying your one trade through 10 different accounts, which I think has positives, but also some very, very serious negatives on it. Okay. So let's review. We're kind of, I have a meeting soon, so I'm gonna have to go. Let's review everything that we've done here so far today. We have modest negative trend in S&P today, although we have clearly a bounce back after yesterday's massive liquidation. A 3% liquidation move, I think is going to create some short covering move. But I think ultimately we probably saw, I will probably, hang on these words, but I think we've seen the highs of the year. And I think a lot of, movement right now is going to be chopped to lower in terms of moves. So all the more reason, by the way, when we start to see, reversals labels to the upside, I think those are going to be very fruitful for people to want to trade in reverse. I traded NASDAQ, I traded S&P with you guys. I traded everything I could. I'm trying to trade essentially one instrument per account. So I have this one instrument for gold. Gold has been the money trade for me today, both because it's it's a relatively predictable volatility filter, and because there's quite a lot of movement here that can be handicapped, and it sent me a lot of reversal signals that I can take advantage of, right? Whereas the equities are sort of trying to figure out how much of a move they want to put in. So there's just a lot more reversal signals in gold than there was in NASDAQ, which is actually only having one. Oh, so this would have been a good one. So I do have 3 accounts. I have my NASDAQ account. I just didn't get a chance to do this, but this would be a good quality reversal signal. Let me just walk you through it. So buy signal, lower low. And by the way, what I'm going to try and do by next week, hopefully I'll have this done, is the candle that is kind of like the proper candle, the checkbox candle, that's going to have a little circle underneath it. That's going to tell you, oh, that's the trade you want to take after a buy reversal is given or a sell reversal, because that is the first highest low, right? So that's another thing that I'm going to do, where I'm not going to have to be guessing quantitatively or visually guessing, because I'm going to have the algo do it for you. And then they'll be set. So there'll be 2 things I'm going to do. I'm going to make sure that we get the alerts. So there'll be a buy reversal alert, momentum trend alert. You can configure all those. And then we'll have the dots. The dot will tell you the actual entry. And I think that'll be really, really cool, right? Okay. So we'll be around on Monday. Hopefully I can showcase all this stuff to you guys on Monday. That'll be my last trade of, day of trading for the year. Hopefully you guys really enjoyed this. I think this was a really fun session, because we got a chance to really tighten up the scalping, define the scalping approach, understand what regimes it works best, understand how to best practice it under any kind of a regime, and hopefully optimize our chances of winning. Today it's just been all level 1, level 2 trades. Gold 1, NASDAQ 1, S&P 1, all good. Look at this nice buy turn trade over here, right? Beautiful buy turn trade here. I missed that one, but it would have been easy. The only other thing I'll say is I'm just, I find after a very large move that the reversal trades are probably going to be easier to manage than trying to, ride herd on trend trades. Because what you're going to see is these massive waves up, waves down, waves up, waves down. And those are built for picking tops, picking bottoms, rather than, riding a smooth highway to profit. So I'll leave it up to you guys. I'm just personally, trying to trade the reversal signals right now, because I think those are the easier ones to do. Okay, well, thank you guys. Thank you for hanging out with me. I'm glad everybody came in finally. Everybody have a wonderful holidays. I'll wish you everybody happy holidays next week, and I'll see you guys in the markets. Everybody in BK, we have our private webinar tomorrow. Don't forget, we're really gonna get down and dirty, and I'll see you guys later. Take care. Bye bye.